For more on Meta and Microsoft's reports, let's bring in Deepwater Asset Management's Gene Munster. Gene, great to have you with us. Great to get your initial takes here. Let's kick it off since we just ended with Microsoft. Your take on the Microsoft quarter.
It's all about Azure, and they didn't need to hit that bogey that Google set, but they did need to see an acceleration in Azure. Of course, they showed that from 29 to 31. I was expecting that 10 points of that growth was going to come from AI, which is effectively their OpenAI relationship. In fact, 12 came from it, which means that their core Azure business, excluding AI, has been stable, growing at 21% despite the law of large numbers. The other piece I'm really cued in here, too, is to hear some real substance on the call about CoPilot adoption. Last quarter, they had 31 comments in their prepared remarks around CoPilot. None of them gave any sort of real substance in terms of what this actually means in terms of monetization. And so I'm going to be keyed into that.
We didn't get any numbers, right, Gene? I mean, I think that they spoke in sort of broad directional terms, like the number has doubled or something like that, but they didn't actually give a firm number on CoPilot customers.
That's correct. I mean, they are just, that's a notorious. Amazon does the same thing after Cyber Monday, is give just a barrage of data points that you try to triangulate. That's been kind of the MO regarding this whole CoPilot adoption. They did say probably the most substance data point last quarter was that 40% of GitHub revenue has some sort of CoPilot. GitHub's a small percentage of their business, call it 5% of their business, so it really doesn't matter. We're still looking for, I mean, at the end of the day, these additional, this 30 extra bucks a month, what does it mean to what has it meant to their revenue and their bottom line? And they have been avoiding that question. I don't think they're going to answer it today, but that's what I'm going to be cued in on.
Gene, do you think it's expensive right now? Would you be? I know it sounds like you're waiting on a couple of different things to sort of get you over that bubble, but you heard the conversation before where it looks expensive to itself. Would you wait here to see if they are in the prove me state because of how they've come so far so fast?
I think so. I mean, the bottom line is that this is probably the most stable of any of the mega caps when it comes to AI. They grew 14% in the just reported quarter, expectations of 14%, and then again 14% for 25 and 26. And I think you pay up for that, Steve. I think that that's one piece of it. I do kind of look at this as a relative game, as which one of the mega caps have kind of the best upside relative to valuation. And I think Microsoft, they're doing a lot of great things. I don't think they kind of hit that. So the bottom line is I still think that this is expensive relative to an opportunity like versus Google.
Hey, Gene, it's Karen. Just to follow on that expensive, what do you think, where should this be trading? What's the right multiple you would feel comfortable with?
Probably the mid to high 20s. If you're going at 14%, that feels like a good number. So we're a ways away from that, I think, kind of on the out-year numbers. But that's, I think, a good number. I would also say I think Google should trade at the mid to high 20s. And it's probably after today right around 20 or 21 times, 22 times perhaps. But again, I think if you look at the AI opportunity and say which company is best positioned, I think Google is a better positioned company.
Let's switch gears to Meta, Gene, because I do want to get your take. And the conference call is about 14 minutes. And we've gotten a couple of headlines. Steve had referenced one of them, the CEO saying that Meta AI now has more than 500 million monthly active users. A second headline says Llama 4 models are training on a cluster that is bigger than 100,000 H100 GPUs a day, which, I mean, it gives you the sense of NVIDIA's business for sure, but also just how much intensity and focus there is there on AI and getting that model right, Gene. So what is your take on the quarter here?
So the quick take on the quarter was related to what the guidance was. They typically come in at the high end of the range. That would imply 20% year-over-year revenue growth. They just reported 19%. So understand it had a high bar. They did guide. I view this as a guide of a fractional acceleration, which is positive. Those numbers quickly, that 500 million number, as a number that Zuckerberg also gave us a few weeks ago. And this kind of this flexing around how much these companies are spending on all of the output. All that's nice to hear. What matters is this, is Zuckerberg's closing comment on the earnings call. He just said that this is the most unique moment that this company has ever had ahead of it. and they are going to be aggressively investing in that. And I think that's what you're seeing with all this GPU. They're going to be on that, stay on that accelerator. And I think that that's a good sign for Meta investors, because clearly this is having a tangible impact. Probably of any of the mega caps besides NVIDIA, Meta's actually seen the tangible impact of AI faster than any of them.